Welcome back to another Explainer. Today, we're taking a highly focused visual journey into a massive shift that's literally reshaping modern corporate strategy. We're moving way past just the theory of ESG, and we're going to see exactly how global risk mitigation translates into hard-hitting operational business value. You know, if you've ever wondered how doing good actually translates into doing well financially, stick around. We've got the blueprint right here. Okay, let's dive straight into this. What you're looking at is the complete visual roadmap. It lays out the entire pathway, starting from the external pressures forcing companies to adapt, right through to bottom-line long-term financial performance. We're going to use this graphic as our map today, tracing it directly from left to right and breaking down exactly how risk is successfully transformed into resilience. First up, on the left side of our map, we have the drivers of ESG integration. Let's look at what actually kicks this whole process off. So businesses don't just pivot massive global operations on a whim, right? They react to undeniable external forces. And the biggest shift we're seeing on this front is the evolution of ESG from a sort of voluntary, nice-to-have corporate gesture into a mandatory, rock-solid strategic framework. Driven by intense climate pressures, crazy extreme weather events, and strict new carbon regulations, the landscape has completely changed. Take frameworks like the Pakistan Green Taxonomy, for example, which mandates strict accountability. This means compliance is no longer just a PR exercise, it's a legal and operational necessity. You either adopt your framework now, or you honestly risk obsolescence. Now, what's really interesting here is how the market itself is demanding this change. It's not just governments applying the pressure anymore. Investors and consumers are fundamentally shifting their priorities. They're demanding transparency, ethical sourcing, and genuine long-term value creation over those quick, short-term gains we used to see. Capital is quite literally flowing towards sustainability right now, and it's leaving outdated business models completely in the dust. Let's move to the center of our graphic to explore the triple pillar framework. So, how do companies actually respond to all these massive external pressures we just talked about? Well, they rely on a central mechanism, which breaks down into three core actionable strategies that work perfectly together. First up, environmental. This dictates exactly how a company manages its climate impact and resource efficiency, which, by the way, directly lowers their operational costs. Then we have social. This focuses on human capital, ensuring things like ethical sourcing and fair labor practices. And that is absolutely crucial because it protects a company's corporate reputation and dramatically aids in talent retention. Finally, governance. This is the structural backbone. It's the transparent risk management that prevents those disastrous corporate scandals you read about in the news. When these three pillars work together, they systematically dismantle complex global risks, basically turning potential massive liabilities into tightly managed assets. And this brilliantly illustrates our next section up on the top right, corporate leaders in action. We've looked at the theory, but how does this actually look in practice? Well, here we have three powerhouse examples, proving that this framework drives undeniable value. Take Microsoft. They aren't just going carbon neutral, they've actually pledged to be carbon negative, actively removing their historical emissions to completely future-proof their operations. Then look at Tesla. They disrupted the entire global auto market by proving that an EV transition is a highly profitable, heavily ESG-driven strategy. And of course, Patagonia. Their legendary commitment to circularity, repairing and recycling products, even famously telling their own customers not to buy a new jacket if they didn't really need one, it proves that deep environmental integration builds an incredibly loyal and fiercely profitable customer base. This brings us to the bottom right of our graphic, and arguably the most dynamic part of the entire strategy, the value creation loop. This is where momentum really picks up. It's a virtuous cycle that just continually self-reinforces. Let's sequence exactly how risk transforms into resilience here. Step 1, it starts with effective ESG management. Once that structure is firmly in place, step 2, it directly drives operational efficiency. You are literally wasting less and saving more. That new efficiency unlocks capital, which leads us to step 3. It fosters incredible innovation. Verifiable innovation in turn drives step 4 by building massive investor confidence. And ultimately step 5, that influx of capital and deep trust ensures long-term corporate resilience. It's basically a continuous self-feeding engine of growth. When that engine is running at absolute full capacity, we get our final result on the pathway, the 6 pillars of value. By mastering this framework, companies unlock superior risk management, heightened efficiency, and continuous innovation. This secures an ironclad reputation, attracts steady, reliable investment, and ultimately cements enduring long-term value. It completely, 100% aligns modern business with exactly what the market and forward-thinking investors are demanding today. So, the crucial point here is that ESG is no longer just some optional add-on. It is literally the fundamental blueprint for future-proofing a business. The question I want to leave you with today is this: how are you integrating this value creation loop into your own long-term strategies to transform global risk into real, measurable business value? Thanks so much for joining me for this explainer today, and remember, keep looking for the structure